Great, we are live. All right, well, I think people are still coming in, but I just want to thank everyone for joining us today. I'm Assemblymember Alex Lee, and today I'll be joined by my colleague, Senator Aisha Wahab and Sabrina de Santiago from the Golden State Opportunity. I have the great pleasure of representing the 24th Assembly District, which includes the communities of Milpitas, North San Jose, Fremont, Newark, and Sunol. And we've been hearing from residents with questions about the tax refund and what happens if their property has been damaged by flooding. So we thought it would be a good time to host a webinar early in the tax season. And today we'll be going over how to file taxes for free, the flood and disaster special tax rules, claiming low-income tax credits, and whether you will need to report the middle-class tax refund on your tax return and how. We're going to go through the presentation first today, and we'll have time at the end for Q&A, so save your question for the Q&A. But you can ask your questions during the presentation by clicking the Q&A function down here on Zoom. We will also have questions that were submitted prior to register or prior to today during registration, and the Golden State Opportunity GSO will be answering those as well after this presentation. And of course, in case you missed any part of the workshop and would like to rewatch or share it, we will have the recording and the slides posted on our website tomorrow. And if you have further follow-up questions, feel free to reach out to my office if you need additional assistance. Just wanted to say that, of course, we are here to assist you. There's a lot of resources out there, especially as tax season approaches, especially as folks are dealing with the aftermath of those New Year's storms. So we are always a resource here. But another great resource is our new State Senator, Aisha Wahab, and I wanted to hand it over to her to give some opening remarks.
Thank you so much. I will say I'm very happy to be here and join my colleague, Assemblymember Alex Lee. This is our first webinar, so we're actually very eager to learn as you guys are also learning. I really do want to thank Golden State Opportunity for hosting this with us. We genuinely, our office and my district director, Nergis, is on the call as well. We want to be able to provide as many resources as possible to our constituents. It's incredibly important, especially as things are kind of moving a little bit rapidly this year. We've seen some of the flooding and the fact that there are people that have been displaced and are having a lot of other difficulties. So today we are not only going to be talking about what resources are available to you, but also who or potentially how to get some of the support that you may need. We are also asking individuals to not necessarily share personal and private and confidential information. We would like for you guys to be able to do that privately through not only the chat feature, but then also potentially following up with Golden State Opportunity. This is incredibly important. And I just want to say again, thank you. And I look forward to working with my colleague, Alex Lee, as well as, our district director leading a lot of efforts to just provide the services that you guys really need. A lot of these services to prepare for your taxes or disaster relief or anything else we do in the future is free to you. So we just want to highlight those as we begin this presentation. And I just want to again say thank you so much for having us. And I look forward to learning just as much as you guys are.
Great. Thank you so much, Senator. And now I'm going to hand it off to Sabrina de Santiago from the Golden State Opportunity.
Thank you so much, Senator. And thank you, Assemblymember, for having us again. We're excited to be here. We'll get just rolling. My name is Sabrina de Santiago, and I'm the Senior Director of Policy and Programs for Golden State Opportunity. Next slide. We are going to cover today, as the Assembly member said, how to claim your credits, how to get free tax preparation, and some special information that is especially relevant to your communities around disaster losses and federal declarations and state declarations. Next slide, please. A little bit about GSO. We are an organization that is dedicated to ending poverty. We do this on two tracks, advocating for the right policies to make sure we're doing long-term change and helping people get help now, which is part of our work to help connect folks with free tax help and with their tax credits. Next slide, please. I got ahead of myself and covered this, so we'll move straight through. So a little bit of information, just background, so that we're all in the same plane as we get started. Folks, what is a tax credit and how does it work? So a tax credit is a reduction in the amount of taxes you owe. And some tax credits are refundable, not all of them. But when you owe zero taxes, so when you have paid more in your payroll taxes and your different your deductions on your paycheck, you may owe zero taxes because you've paid more in already. And then these tax credits become your refund. For example, if you owed $350 on your taxes, but you qualified for the $1,000 young child tax credit, you could get $650 back. Next slide, please. And why is this important? Well, there's been all kinds of research that shows that families and households who get the Cal EITC do better in healthcare, education, families are stronger. And I'm sure it's not a surprise to you all. You have more money, you have the ability to access better healthcare, a lot better education. And so there are great benefits to helping your family or your household get these dollars. Next slide. So there are two EITCs. There's the California EITC, the Cal EITC, and the federal EITC. And if you're low income and you work, you may qualify for both. These credits are refundable and can reduce the taxes you owe or give you a refund. Next slide. We'll start with the federal EITC. So who qualifies for the federal EITC, excuse me. The requirements are fairly straightforward. You need to be a taxpayer. And if you have qualifying children, they must have a social security number. This is the federal. You must have a social security number for the federal. You must have lived in the United States for more than half the year, be a citizen or resident all year long. Also, the resident includes anybody who, different types of visas as well, who may be eligible to work. And then be 19 years or older, or have 18 years older and with children, and have earned income within the yearly limits. Next slide, please. So is there an income limit? Yes, there is. Because these are targeted to folks who are lower income, there are some thresholds that you'd have to meet. So for example, a family of 3 who is filing as married, filing jointly, could make up to $59,187 and would still qualify. And an individual who was filing as a single or head of household or a widow, and they had no children in the household and were earning up to $16,480. That's about half of part-time, what a part-time job is throughout the year. Next slide, please. Now, how much is the EITC and what's the maximum? The maximum for this upcoming year, so when you're filing your taxes this year, for a family of 3 or more qualifying children, $6,935. That is a large amount, and for many families who receive the credit, it is equivalent to more than several months of income. And if you're a single person who doesn't have any children in the house, you still can qualify for up to $560 back. So that's always nice money to have. Next slide, please. And now the Cal EITC. The Cal EITC is the California version of the federal credit. And the California version applies to a lot more people. You have to have earned less than $30,000 as a household, no matter how many dependents you are. If you're a single person earning less than $30,000, or you could be a couple with 2 children, you have to be earning less than $30,000. $30,000 is the hard cap. You have to have lived in California for more than half the year and be over 18. So you don't have to have children in the household to qualify for for some amounts. You also don't have to have a social security number. In California, individuals with an ITIN do qualify to receive the Cal EITC. Next slide, please. And what is the maximum Cal EITC? So as you can see, the chart here outlines that there is a cap of $30,000, but the Cal EITC can, for a family of 3 or more, can give you as much as $3,417. And for an individual who has no children in the home, you could receive up to $275. There's you'll see a couple of numbers on the side here. There's the young child tax credit and the foster youth tax credit. We'll talk a little bit more about those as we move through the presentation. Next slide. So the Young Child Tax Credit, if you qualify for the county ITC and you have a child in the home under 6 years old, you qualify for the Young Child Tax Credit, which is an additional credit of up to $1,000 in this tax year, $1,083 if you're in a very particular part of the income bracket, but for most folks, it's about $1,000. And that is one for all the children in the household. This is not like the federal credit where it was per child, but $1,000 is certainly nothing to sneeze at. Next slide, please. And so I just want to take a moment to reiterate this because sometimes it gets lost, that if you're an I-10 filer, you do qualify for some credits. You do qualify to receive the Cali ITC, which means you also qualify for the Young Child Tax Credit. Between those two credits, depending on the size of your family, that is a couple of $1,000s that you may be able to take home, even if you don't have a Social Security number. Next slide, please. There are some new things for this upcoming year. There is a new tax credit for former foster youth. If you qualify for the Cali ITC and you are transition age youth, so under 25, you may qualify for an additional tax credit of $1,000. And this is in recognition that a lot of former foster youth are independent. You know, they don't have some of that familial family network and don't have some of that support. So this is something to help them start their adult lives and get ahead. The other is, of course, the California Middle-Class Tax Refund. It was called a tax refund. And here's the tricky part. According to the IRS, it is not, in fact, a tax refund. It is income. So you're going to receive a form called 1099 Miscellaneous. It's going to get mailed to you from the state. You may have already received it. I received mine. And what it is that additional income has to be reported on your federal income tax. It does not need to be reported on your California income tax. The state of California has declared that that is not income. So you will only pay income tax on the federal side, and you should get that form. Some people are still getting their payments now, though. The last batch went out about 2 weeks ago. So there are still some people who are receiving it. If you filed a little later in the season and you're just getting your tax refund, your California Middle Tax Refund now, that is still something that you should declare during this tax season. If you don't get it before April and you're wondering what to do, I have some recommendations for you, and they're going to be to reach out to one of our VITA sites, because you may have to file an amended return, and our VITA sites can help you do that for free. Next slide, please. So in California, with the flood and disaster damage, there's a couple of things that I want to highlight, some big picture. So in California, you claim it on your 2022 tax return. The filing extension has been extended to May 15th. So you'll have until May 15th to pay your taxes, not the April date. I'll let you all in on a reminder. May 15th is actually the date that if you owe taxes to the state. So if you are a person who is expecting a refund, or you've, because of your income, you actually can file past the May 15th without any penalty. But if you're going to owe money, the May 15th is the day to remember and to make sure that you're filed for. Now, Alameda and Santa Clara counties are eligible for some relief. There is a gap between some of the disaster relief that has been declared in the state and the disaster relief that has been declared at the federal level. But there is some amounts of release depending on the type of impact that you received from the disaster. And for the California, oddly enough, they're going to ask you to submit Form 4684, which is a federal form, with your California return, because that is the format that's going to lay out everything that you are claiming. So it always throws people off a little bit that you're going to take a federal form and include it with your California return, but that is the way to process it. And then on your federal taxes, you can claim that for your 2022 tax year or your 2023 tax year. If you're a business or have a small business, there are special rules for you. There are forward deductions that you can make in future years. That gets a little more complicated. So I think that is something that if you have questions about, we'll get your information and connect you with somebody. The federal deadline has also been extended to May 15th. If you are in one of the counties that has been declared a federal disaster, so then you would get that extension to May 15th. Again, there are some places, some parts of Alameda and Santa Clara County receive relief depending on the date of the disaster that you have suffered from. I know a lot of families in Alameda County were impacted by the New Year's floods, and those are just outside of the federal declaration. The federal declaration starts on January 8th. And so they are not considered part of the federal disaster, which changes a little bit of the rules and the kind of help that you can get. Just to let everybody know, there's an assigned FEMA declaration number, and that is 3691EM. It's actually fairly easy to find. You don't have to remember this or write it down. If you Google federal declaration and then Alameda or Santa Clara County 2022, 2023, it's one of the top two answers that comes back from Google. So you can have that information, but you'll also get a copy of this and have this on the website if you want to refer back to it. And then of course you have Form 4684. There was a whole booklet about Form 4684 about how to fill it out. There are lots of different rules and exemptions. If you have the time, I think it's always a good idea to read it so that you know and aren't relying on somebody else, or at least know what questions to ask. But there are also worksheets that are going to help you to determine how much you are going to claim that are part of the Form 4684, but have additional instructions in the booklet. And what I'll do is I will ask the follow-up email to have that link so that you all have it very handy. And I'll also ask them to include the link that has the FEMA declaration page so that you have access to the number and some of those details. The one thing I'm going to flag for everybody is that you can claim losses that haven't been repaid by your insurance on your taxes. If you were repaid by your insurance for a loss, you cannot claim that as a loss. So I think sometimes people get confused on that. That's double dipping. You would have been paid and then you're still asking to take it as a loss. So you would be doing that twice. Please make sure that you're claiming losses that have not been repaid by your insurance. And I hope many of you don't have that, because I hope your insurance gives you back all of your losses. Next page, please. So for all of these different credits, I know I've talked about it a lot, but I want to say it very clearly. You have to, to claim your losses, you have to file your taxes. There is no way around that. If you want to claim the losses, if you want to get these tax credits to put dollars back in your pocket, you must claim your taxes. But as it says on the slide, we can help make it as simple as possible. Next slide, please. Our website is Cali ITC for me. There is different information there about the tax credits. There is a calculator to help you estimate how much you might qualify for. And we have some information about free tax preparation help. Let me talk a little bit more about that. Next slide, please. So you can file your taxes online or in person with a certified tax preparer. They are listed on our website. These are folks that have been trained by the IRS who have to pass a test every year, get certified, and they are volunteers who work with local community organizations to help you file your taxes for free. There is an income cap. For some programs, it runs as high as about $77,000. That's the federal program. Some local programs have a little bit less, but they also can help depending on the location. Some can help with small businesses. So if you're like a sole entrepreneur, you may be able to get help through them too, because a lot of that income that you're reporting is self-employed, and so doesn't have to do a full tax return, business tax return. Next slide, please. So on the website, there are 3 types of free tax preparation help available. You can find the help from the VITA site with an IRS trained volunteer. You can find an in-person drop-off tax location near you. In-person or drop-off, because some places are still doing drop-offs. They found that worked during COVID and want to still offer that ability because it lets them do more taxes than they might normally be able to do. And then there are lots of places who have returned fully to in-person. So you call them, you make an appointment, they tell you all of the forms that you need to bring, and then you visit them just like you would any tax preparer. And they'll help you walk through everything, sign your forms, and get your taxes filed. And the last one is File for Free with Free File. That is the federal government program. It's not as streamlined maybe as some other programs, but I don't think that if you have a little patience, it's not too much harder than, I would put it near maybe setting up some of your preferences on like your Amazon account, right? There's lots of steps, there's lots of questions, but if you take your time and walk through them, you can get through them all. Next slide, please. And if you need help from a professional, and these are the IRS certified VITA volunteers, there's Get Your Refund. This is an online site that functions as an online VITA center. So next slide, please. When you go to this site, it will ask you what kind of help. You can file your taxes with a little help. So they'll review you enter your information, they review the files, and then can give you help if you need it or you get stuck. You can file yourself with their DIY tool. It's really easy to use. It's the kind of, if you were using it, doesn't feel any different than any of the big paid tax preparers that you might go to online. And then there's also the option to ask a question. Sometimes, you're comfortable doing your taxes, but there's that one thing that you're not quite sure. This is that great place to get your questions answered as you're doing them, because they have lots of folks on hand to help turn around those questions quickly. Next slide, please. And as I mentioned before, this is what the free file looks like on the website. I wanted to make sure that you all saw that you have to scroll down a little bit when you get to the free file. It's not just the information at the front. Next slide, please. And then a little pitch for us at Cali ITC. Please check out our website or check out Golden State Opportunity. Then we're on Facebook and we've got email updates. We will send additional information, good reminders, different things to make sure that you are taking advantage of all the different benefits and dollars that the government can get to you. Next slide, please. And that's just our information, should you want to have it. We'll also include it in the email that goes out, and it's part of the slide deck. Next slide, please. That brings us to questions and answers. And so happy to dive into the questions that you all may have. I know some folks submitted some. I will say I had a chance to review the ones that came in. There are some that got a little bit personal. So if you don't see some of your question or the issue that you raised here answered, know that we're going to reach out to you individually via email and connect you with someone who can, in your local community, who can help. We just don't, as the senator said earlier, we want to make sure you're not sharing anything personal here, because this is being broadcast live, this is being recorded, and so let's make sure we keep your privacy intact. So for our questions, we've had some asked here. You'll excuse me while I flip over. And there's a couple of things.
Oh, I was going to read a couple of the questions out for you.
Perfect. Thank you.
So Brian asked, can a family of 3 include an elderly family member?
Yes, absolutely. If someone is part of your household, that is the way that the IRS and the FTB think of a tax filing unit. It's about who lives together. There are some credits that have some special rules, like the CTC, about how you prove that you're related to somebody, but for the most part, an elderly relative who is part of your household, who is a dependent for you, absolutely. Or even if they're bringing in some income, but it's minimal and you all want to file together as a tax unit, that is also an option.
Great, thank you. And you kind of touched on this already, but if someone just received their middle class tax credit, should they report it for this year or next year or the past year?
If they received it in 2022, then they should report it on their 2022 taxes. If they received it in this year in 2023, they should wait till they file their 2023 taxes because it's the year in which you received your income.
For Alameda County, which casualty loss can one claim on the 4684 form? The federal casualty losses, the disaster losses, or qualified disaster losses?
Well, this goes back to that question about when you incurred your loss. If it was the New Year's flooding that happened, those have not been declared a federal disaster. And so you claiming them as a loss, but not the federal casualty losses, the disaster loss, and the qualified disaster losses. Those are categories of FEMA declared disasters. So you would claim it as a loss, much like you would claim something that was stolen from you, or if you had a fire. That is how you would claim your deduction for something that doesn't qualify for one of those FEMA disaster declarations.
And kind of going off that, someone asked, can we split the loss between 2022 and 2023, especially if the loss is significant?
Yes. There are different rules for the state and there are different rules for federal. For federal, you can carry losses forward. And for the state, they have said 2022 is the year to file their losses for those areas because Alameda, that we're still talking about Alameda County, there was, it was a state declared disaster area. So you should try and file in 2022. However, there's an exception to this. Let's say, and I hope none of you face this, but let's say you had your loss in this year, January 15th, we'll pick. You have started all the paperwork, you're submitting it to your insurance company, and you do that next month. All the back and forth, and you don't get paid until next year. You would count the loss next year for anything that they didn't repay you in, because that is when you are able to reconcile what they didn't pay you. So I know that sounds a little bit tricky, but remember that you need to know what you're going to receive back from your insurance claim, if you have an insurance claim, to know how much you can deduct as a loss. So that will influence as well what year you want or need to declare the loss.
Thank you. So how would you compare the free filing resources compared to, say, TurboTax? People are kind of asking.
Yeah, I really love Get Your Refund. You know, we have worked and get support from some of the other paid preparers out there because they, you know, have community efforts that they're doing. So, but I'm a huge fan of Free File. Like, I fangirl that all the time. They have done such a great job. It is as easy to use as anything I've ever seen, you know, kind of like signing up for like Zelle or Cash App. The questions are direct, they're short, they'll help you understand what forms you need. And then that option to get the help is, to me, or to get the review of a set of eyes, an actual person who looks at this and not an algorithm, if that's what you need. I think that's invaluable. So I would, and it's free. So I would say go to Get Your Refund. It is a great resource for low-income folks who want to file.
Awesome. And kind of going off of that, if someone hadn't done their 2021 taxes yet, are you able to e-file your previous tax returns?
So previous returns should be filed on paper. For folks who are, I'm going to stop and make a pitch for the different VITA sites. I know I've talked a lot about them. But when your taxes start to get a little more complicated, is there a revision you have to do for last year? Maybe you didn't file last year, or you have some losses that are, going to be more complicated to account for. Going to one of these VITA sites is going to be an amazing resource where someone can walk you through all the different steps, and really, hold your hand as you're going through that process. Because I know that it is, we're talking about a lot of money for a lot of folks, and it's an important piece of how they're going to put their lives back together. So I pitched the VITA services. As I said, on our website, we can connect you. There's also lots of great local folks, and we'll have some of those resources go out to everybody. But if you're in any way complicated, it's great resources. I have family who've used it and love it.
Can you explain the VITA website resource a little bit more?
Oh, sure. So the acronym is VITA, VITA, stands for Volunteer Income Tax Assistance. It is a program that was started by the federal government, run by the IRS. They have a 6-week training program that they run folks through, and there's a test at the end of that. And people who graduate from that can be part of this VITA program. Different community organizations and governments across the state and across the country have a program called a VITA site. They sign up for a location number from the IRS. They put that on all of the returns that they do. The volunteers that work with them are going through that site. So there's a lot of checks and balances. For the VITA site, for example, no return gets filed without 2 people looking at it, the person who prepares it and a reviewer. And so they have been shown to get more dollars for the people who file with them than if you go to a paid preparer, and fewer errors. So the quality that you're receiving there is amazing. And so they're local or online now. Because of COVID, that made things work a little bit differently. If you go to caleitcforme.org, that will help connect you to any of those services. We have a whole page on how to file, and it's got links to a map where you can see what's near you, that we're trying to update all the time because, the beginning of tax season, some folks start a little later. And then it has the get your refund resources, and it has the free file as well.
Great, thank you. And if someone didn't get their tax return from last year, what should they do?
There are a couple of different things here. They filed it on paper. I'm not quite surprised. Paper returns, there was that huge backlog that you might have heard about at the IRS. They're mostly through all of that, but that meant that they were working a season behind almost. And so if you filed it on paper, it is delayed. And there's not much to do about it once you've sent it in. You just kind of have to wait it out because it's already in process. If you filed electronically, that's a little different. It may be that something in your return required an additional look. Sometimes that happens. It doesn't mean that you've done anything wrong. It just means that, they take a certain number of returns and look at them, and there's certain to make sure that people are accurate in filing. But I would contact your VITA site, your local VITA site, because they can help you track it down. There's also something called, and we'll include the link here. It's the, there's a government agency that helps oversee client interactions with the IRS. And so they can help you track down something or work through a problem. And we'll make sure to include their information in the email that goes out. But they would be the other resource, I would say. So either your VITA site or to the IRS oversight.
And going off the storm-related damages, what would be the best way to quantify a loss? The county inspector or quotes from contractors?
There is actually a worksheet to go through. There are rules about the loss value, the original value for the IRS. Your insurance may have different rules, and you should reach out to them for that kind of information. Some of them do ask for quotes to rebuild or replace. But for the IRS, they have a worksheet. They literally just walk you through all the different things that, one of them is like dining room. You can list the things that were damaged. It tells you, what maybe the value of it new, the depreciation, and what you can claim. So there's that form. It'll be in one of the links that we sent around. And I find that it's the easiest way to get through all of the losses because it helps remind you of all the different steps and places you need to look. They've designed it to be helpful, and it really is.
And this one's a little bit different, but it's if they were a victim of tax identity fraud and filled out the affidavit for federal, does it automatically go to the state?
The answer is it's supposed to. In my personal life, I always double and triple check things. So I would make sure to send that in with your return as well. Because you don't know when the IRS is going to communicate some of that information back. As you all know, the IRS is understaffed, and so things take a little longer. So I'm a fan of going the extra step and not relying on the IRS to do that. One quick thing, I wanted to make sure I mentioned the name of the actual IRS taxpayer oversight, and that's the National Taxpayer Advocate. They are funded by the government, but they are completely outside of the IRS, and their job is to help people, as it says, taxpayer advocate. They are on your side to help you understand and work through problems with the IRS.
Thank you. For another flood related question, for someone whose damages were sustained after January 8th, so if they're in that timeline, which one would they claim? The federal casualty losses, the disaster losses, or the qualified disaster losses?
It depends on the county. Some of them had slightly different declarations for the kind of aid they could receive. The federal declaration has been amended twice, and so there's been some changes to it. So it's going to depend on your county. Overall, though, I'm hesitant to give like a blanket answer because it really depends on on the individual pieces of information. I don't want to lead anyone astray, but just to speak a little bit on the differences between federal casualty losses, disaster losses, and qualified disaster losses. And this is all in that guidebook that we'll also be sending out. It's for a federal casualty loss, it's the loss of a personal use property that is attributed to a federal declared disaster. And it's got to have happened in the state that is receiving help. A disaster loss is a loss in an area that is declared a federally declared disaster and is an area that is eligible for assistance, but it may not, you may not qualify for both the public and the individual assistance, which are the different levels that FEMA support provides. So the most broad one is the federal casualty loss. There are then narrower definitions for a qualified disaster loss or for a disaster loss.
So would damages, storm damages, let's say from trees falling or damaging your roof or fence, would that also be under this?
When things are part of the overall disaster, the damage has occurred as part of the disaster, they do qualify as a loss for that. Again, the catch is only things that haven't been repaid by your insurance or you haven't received funds for, because I know that there's also some other aid programs that people are receiving. But so federal casualty loss is the largest category.
Do you happen to know if these are, let's say, the floods or earned income tax credits? Are these already built into these online tax apps?
The federal disaster is not as common, so it doesn't always show up in all the different programs that I've seen. The different tax credits are. Those are baked right in. It's the kind of thing where you'll get asked questions, general questions like, how much did everybody in your household make? How many people? What are their ages? And from that information, they can determine if you qualify for the different tax credits. For the disaster losses, because they vary so much from case to case, one-on-one help through the VITA site is probably the best way to walk through that.
Thank you. Robert is asking, are landlords also eligible for the claims on taxes or only residents?
If you operate a business, which a rental property is, in a county that was part of the federal disaster declaration. Sorry, that disaster declaration today is not rolling off my tongue. You can receive some types of help. So yes, there is some help for businesses who are operating in that area.
Thank you. We have a couple of questions that are more about the actual tax return part. So is there a medical expense deduction when filing a tax return?
There is an expense for healthcare. It has to reach a certain threshold. And you need to work through it to calculate. So the short answer is yes. How much is depending on how much qualified for under the definition of the healthcare spending.
And then for seniors who haven't received their SSA tax forms yet, is there anything special they should do?
Unfortunately, you should wait until you get it. I know lots of folks are eager to file because, you know, having that tax return back is an important source of income, but you should wait until you have that form so that you can file with the most accurate information. And for whatever reason, if something wasn't accurate, it can be work to go back and amend, especially when the amount is small. So I'd recommend, you know, if you can, you should wait until you have your tax form so that you can do your tax return in the most accurate way possible.
Thank you. And then our in-home supportive services, is that income? Would you need to report that to the IRS?
Yes, it is considered income. And the amounts for IHHS, some of them don't meet the threshold for federal filing requirement. Especially if that's your only source of income. But for anybody who's receiving IHHS or seniors who may have worked just a couple hours, or anybody who maybe you didn't work very much during the year, you know, you were able to get a couple shifts during the holidays, you know, picked up a job in the summer, but it was short term. If you have had income and you're under some of those thresholds that we were talking about, the 30,000 for the Cali ITC, and about 58,000 for the federal EITC, there is a likelihood that you may qualify for a tax refund. And so I always encourage folks to go ahead and file, even if you're under the filing requirement threshold, so that there are dollars out there, you can still get them back. And remember, being in the tax system is how some of these different rebates and dollars have gone out, right? So the state dollars that went out last year, if you don't file your taxes, you weren't able to receive that. So always advocate that even if it's small income, go ahead and file, because for the most part, people have dollars that can come back to them.
Great, thank you. We have one question that might be a little specific. So if it is, I will just ask you to redirect your question, provide your contact information. But so she says that she spent about $40,000 in 2022 to get her house ready for sale, but it didn't sell until 2023. And if she can hold over that $40,000 till 2023. Sabrina, you're muted. Sabrina, you're muted.
Oh, I'm sorry. I had myself on mute. I would love to get more information from the individual just so I can make sure I'm giving them the most accurate answer.
Okay, great. We'll reach out to her. For those that have, or they believe they have gotten the middle class tax credit, but they haven't received their 1099 yet, how do they confirm whether the state sent one out?
In theory, you call the FTB's 1-800 number. So the tax season technically opened, about 2 weeks ago. So a lot of times, I know I used to think this, I'd be like, well, why didn't the state or my employer or everybody just send me stuff so I have it on the first of the, like the first week of January? And it's because they work off that deadline of when the tax season opens. So it's only been open for 2 weeks, so that I don't think that I don't think that it's cause for concern quite yet, especially if you received it like the payment fairly recently in the last couple of months. If you received it in the very early months and you haven't gotten your 1099, the FTB 1-800 number is the best way to call.
Thank you. And then for someone saying this is their first time attending a webinar or their first time filing taxes, are there any free resources for people to learn how, step by step, or how to fill out their forms?
Absolutely. Depending on where you are in your life, we've got different resources. Some of our community college partners host online events to help you walk through that information. But especially if you're on the younger side and you're comfortable with computers, Get Your Refund does walk you through it very clearly. But also, we're a resource here. So I welcome folks who want to talk to me, answer questions. My email will be there, but I'll also give it out here. It's sabrina@goldenstateopportunity.org. Reach out to me and let's make sure that you've got all the support you need. Welcome to the tax filing family.
Thanks. Let's see. Someone just wanted to convey thank you to you.
Well,
I guess
here to help.
I guess if you happen to know any difference between the free filing programs or TurboTax, is there a really difference, or is it mostly just the cost difference?
They are different in how the user interface, how you enter your information. So they don't look exactly the same. I will say TurboTax has a free option. Sometimes folks don't qualify for that. And so you may start out free and then turn out you don't qualify for free. But if, I know I'm going to sound like a broken record, but like, as I said, I'm a fangirl of it. I think Get Your Refund is the easiest to use of, the paid preparers online, free file. It's as easy as setting up like an account in an app that uses your credit card.
Great. And then this one's a little bit specific, but if you didn't file a claim with your home insurance company because you want to avoid the premium going up, can you still file for losses?
So let's connect with that person. There are certain rules about what is what you have access to be reimbursed for. And so let me connect with them so that we can, just make sure that we're giving them the best advice to stay on the up and up. Wouldn't want to lead anyone astray there.
Okay, great. And I just sent them a message.
Perfect.
Is there reimbursement from the government to the paid tax preparers?
Does the government pay the tax preparers in the VITA program or a paid tax preparer? If it's a paid tax preparer, no. You pay them up front. For the VITA programs, they do receive a grant from the federal government. It's not usually very much. The people who are doing the taxes there, they don't get a salary. Sometimes they get, donuts or, the kinds of things that you would think a volunteer with, but no, they don't get paid by the government to file your taxes. These are truly dedicated people who want to help. And many times it's people who received help themselves who then want to turn back around and offer that help to somebody else. Also, lots of retired accountants.
So how much would it cost for you to file if you don't qualify for the free tax prep?
Free tax preparation depends on where you go. Your local paid preparer in a corner shop will charge something different than one of the online shops or even an in-person of one of the national chains. I've heard that the average is around $300-ish. That depends on the kind of filing you're doing. Sometimes if you don't take the standard deduction, for example, there might be more of a charge. If you are doing something more complicated, there may be more of a charge so that they charge you almost by the sheet sometimes. Like if you have to do another form, since it's more work for them to fill out, they charge you for that. About $300 is what we've seen as a national average. In my own personal experience, I've seen everything, from very simple taxes for about $200 to more complicated taxes closer to $500.
I think that's all the not too personal questions.
And I want to thank everybody with their patience on that. I would love to dive into the details with each of you and we'll help you get that information. So many of the tax questions, they're little pieces that we have to put together to be able to give you the right answer. And I don't want to, with something so important as your taxes and so important as your money, I want to make sure that I don't give you bad information. So I really appreciate everyone's patience with that.
And then can you share your email with everyone once more?
Of course, it's Sabrina, SABRINA, at goldenstateopportunity.org. So Golden State, all one word, opportunity, still all together, no spaces, .org. Oh, thank you for typing it in the chat. I should have just done that.
Thank you. Thank you so much for answering all of the questions, Sabrina.
Happy to help in any way we can. And I look forward to reaching out to those of you who had those individual questions so that we can make sure to connect you with help.